They doubted you for watching this space too closely. They called you obsessive for checking charts at midnight. They said you were chasing smoke, chasing nothing, chasing a coin that would never move again. But some people don't watch the market because they're desperate. They watch because they already know what's coming. And today we're going to look at the pieces, the real pieces, that are quietly lining up while everyone else is busy giving up. Let's talk about XRP. Right now the charts are telling a story of exhaustion. A well-known chart analyst known online as Chart Nerd pointed out something worth sitting with. XRP has just confirmed a pattern on the 2-week 200 EMA, and at the same time it touched its 300-week simple moving average near the 1.12 mark. That's not just a number, that's a foundation, a floor that history has built, brick by brick, cycle by cycle. Either price holds here, stays above the low it set back in June, and finds its footing, or it slips below both lines, the way it has in past cycles, and asks the market to wait a little longer. That's the moment we're in. Not chaos, not collapse, just patience being tested again. And while the broader market sits in this same low, quiet, uncomfortable place, something else is happening in the background, something almost poetic in its timing. Michael Saylor's MicroStrategy is now under investigation. The Rosen law firm has opened an inquiry into potential securities law violations, centered on whether the company made misleading statements to investors. Remember the pitch, the promise that there was upside without downside, a dividend while you wait to get rich. Sounds beautiful when you say it fast. Sounds different when a law firm starts asking questions slowly. We're not lawyers here. We're just people who've learned that promises this clean usually come with fine print this loud. We'll let the courts decide what that fine print means. But while one chapter of crypto faces scrutiny, another chapter is racing toward its deadline, the Clarity Act, 20 days. That's what's left before Congress returns from the July 4th recess on July 13th. 20 working days, roughly 4 weeks, to push this legislation through the Senate, send it back to the House, reconcile the differences, and place it on the president's desk before the August recess even begins. 20 days to decide what the next decade of American innovation looks like. Some have suggested the delay isn't about disagreement on policy, it's about timing, about not wanting a celebration tied too closely to the nation's 250th anniversary. Whatever the reason, the pressure is mounting, and Senator Cynthia Lummis has said it plainly. Thousands of hours of negotiation are about to become a finished text, released around July 4th, with movement expected to follow in July. Not maybe, not eventually, in July. And while America debates, the rest of the world is already moving. MiCA, the European Union's markets and crypto assets regulation, goes live on July 1st. Not in 2 years, not after a long phase-in period. 4 days from a regulatory framework becoming real across the entire European Union. This is the part that should sit heavy in your chest for a second, because innovation doesn't wait for permission. It doesn't pause politely while paperwork gets sorted. It moves to wherever the door is open. And right now, while some countries are still debating whether to build the door, Ripple has already walked through it. The company holds more than 75 regulatory licenses across the globe, including in Luxembourg, granting it MiCA compliance in the EU well ahead of the deadline. 75 licenses. Read that again. That's not a company hoping for legitimacy. That's a company that already has it, stamped and signed, country by country, while the rest of the industry argues about whether legitimacy even matters yet. And the visions of what's coming are not small. Visa has projected that crypto and digital assets could see growth resembling the e-commerce boom of the 1990s, a transformation that turned skepticism into infrastructure almost overnight. Some who lived through that boom remember exactly how it felt, impossible, until suddenly it wasn't. There's a phrase worth holding on to here, not impossible, just early. And speaking of early, X, the platform formerly known as Twitter, with somewhere between 550 and 600 million users, has begun rolling out its own financial product, sometimes referred to as X Money. Built around features like FDIC-insured access, a metal debit card, peer-to-peer payments, and passkey-based security, it's a glimpse of something larger, the blending of social platforms and financial infrastructure into a single, seamless experience. 500 million people. You don't build a financial backbone for 500 million people without rules, without regulation, without clarity. This is exactly why the Clarity Act matters so much right now. Not because of speculation, because of scale. And the scale doesn't stop there. The U.S. Treasury market, somewhere around $30 trillion in size, is in the early stages of tokenization. The Depository Trust Company, the largest central securities depository in the country, is exploring how to bring those treasuries on-chain. One industry voice described it simply: having the ability to tokenize U.S. treasuries on your platform is one of the most powerful unofficial endorsements a network could ever receive. And this is where the threads start to connect. Ripple Prime is licensed to help facilitate settlement through the DTCC and the NSCC, the same infrastructure that connects to globally systemically important banks. JP Morgan, Bank of America, Citigroup, Goldman Sachs, Morgan Stanley, Wells Fargo, BNY Mellon, Barclays, Deutsche Bank, Bank of China, HSBC, RBC, TD, BNP, Paribas. This isn't a list of dreams. This is a list of institutions already connected to the same settlement rails that Ripple Prime touches. Now here's where the story turns inward, back to the people who never stopped watching. While retail investors have been described as fleeing, calling XRP a lost cause, something quieter has been happening beneath the surface. Wallets holding more than 1 million XRP now control close to 3/4 of the entire circulating supply. 3/4. Let that sit for a second. Not held by panic, not held by people checking the price every 5 minutes out of fear. Held, and apparently held with intention. Standard Chartered has offered price projections in the range of $8 by the end of this year and $26 by 2030. Projections, not promises, and certainly not guarantees. Markets don't owe anyone an outcome. But projections like these exist because someone, somewhere, is doing the math on what utility and adoption could mean if the pieces continue falling into place. And here's the question that lingers in the quiet moments. The ones late at night when the charts are red and the comment sections are cruel. How many of those large wallets belong not to retail dreamers, but to the very institutions already wired into the global settlement system through Ripple Prime? No one can verify that with certainty. The concentration of supply has been confirmed, roughly 74% held by large wallets, but the identities behind those wallets remain unknown. That's not a gap to fill with assumption. It's a gap that simply exists, honestly, for now. But ask yourself what happens if even a fraction of those globally systemically important banks begin routing transactions through faster, more cost-efficient rails they're already licensed to use. That's not a guarantee of price, that's not financial advice. That's simply a pattern, a convergence, a moment where regulation, infrastructure, and institutional access seem to be lining up at the same time, in the same direction. History doesn't usually announce itself loudly. It arrives quietly, in licenses filed, in legislation drafted, in deadlines counted down day by day, while most people are looking somewhere else entirely. Not panic, not certainty, just timing. One bill, one deadline, one regulation taking effect across an ocean, one supply structure quietly shifting while the crowd looks away. This is the part of the story that gets written before it gets understood, the part where patience looks like nothing is happening, right up until the moment everyone realizes something already did. You don't have to predict the future to recognize a foundation being poured. You just have to be paying attention while it happens. And if you've made it this far, you already are. This isn't financial advice. Markets carry real risk, and nothing here is a promise of what comes next. It's simply a perspective, one piece of a much bigger picture still being written in real time. If this kind of honest, grounded look at where things stand means something to you, stay close. Hit that like button, subscribe if you want to keep walking through this with us, and drop your thoughts below. Because the people who show up early to these conversations are usually the same ones who understand them first. We'll see you in the next one.